What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Plug Power, ticker symbol PLUG. The company reported their Q4 earnings just a couple of days ago on March 1st. We're recording this 3 days later on March 4th. Now, the revenue came in at $162 million. We'll take a look at that when we get over here to the financials with Plug Power. If you've been following our channel for any length of time, we haven't really been stressed out about the revenue growth over at Plug Power. It's really been the operating margins and finally the net margins on this company that we really have been negative here on the channel. Probably one of the few channels here on YouTube that's actually been negative on this stock. Now, from a technical perspective, I do have a weekly view on this stock chart. I mean, this stock's been around for a long time, almost 2 decades, over 2 decades. In fact, we'll talk about how intermediate this stock is actually kind of in an uptrend, and we'll talk about maybe shorter term, some of the trends that we're looking at with Plug Power. Quite frankly, the stock is kind of setting up to go one way or another. And I know most stocks either go up or down, but this one's looking like it wants to make a move pretty strong in one way or another. Talk about that here in a moment, but we are going to look at the financials on this one. We'll talk about the most recent quarter, $162 million worth of revenue. Unfortunately, we're not going to be able to really compare it quarter over quarter on a yearly basis or even year over year because they had this really weird accounting quarter where they actually had to recognize negative revenue, if that's even a thing, but they had to do that from an accounting perspective. So we will kind of ignore that, give them a pass on that one, even though, look, we're not going to give them a pass for that. So we'll focus primarily here on the most recent quarter. Now, what we also got from Plug Power was revenue goals in the upcoming the upcoming year between $900 million and $925 million. Consensus was actually closer to right in the middle, about $910 million. If they hit that at today's current stock price in about the $24 per share, that would give them a price to sales earnings forward on that 15 times. Now, they are expected in the upcoming years to really grow their revenue. So the upcoming year in 2023, the calendar year after this one, we're expected to do about $1.4 billion worth of revenue over at Plug Power, and they gave us the goals for 2025. So essentially 3 years out, they're expected to get to about $3 billion worth of revenue and a 17% operating income margin, which certainly would be very strong, if, in my opinion, from this company, if they're able to achieve that. But at the current time, they are not achieving that. You notice we had revenues of about $161 million. Now, I think most people are comfortable with the fact that Plug Power is losing money on an operating perspective, and then certainly if you come all the way down to net income, this company is losing money. But what's unique about Plug Power is they're losing money from a gross profit perspective. That is a gigantic red flag. And in my book, my investing philosophies, and in what I do as an investor, if a company is losing money from a gross perspective, it's just simply not investable. And you might give a company like Plug Power a pass on the fact that they have negative gross margins. We're not talking about negative operating margins. We'll talk about that in a second. And we're certainly not talking about negative net income. I've certainly invested in companies over my investing career that had negative operating income and negative net income. This company has negative gross profits, which means they're basically giving away the product at a loss. They're essentially giving it to customers at a loss. Now, some of you might make arguments why they're doing that, why that's a good strategy. But in my opinion, if you fill your portfolio up with stocks with negative gross margins, you'll be searching the Sunday classifieds for a job very soon, because your job as an investor will be over very quickly. You see, off this $162 million worth of net revenue, we had nearly $250 million worth of cost. That includes essentially across the board, this company loses money on each of their individual business units. And we're seeing across the board cost over at this company just absolutely increasing by at least a factor of about 50%, some even higher than that. So you take your revenue of about $162 million, you minus off $249 million, you get gross profit of negative $87 million. Again, this is like Nike making shoes for $100 and selling them for like $80. This is basically what Plug Power does. They create a product at a certain price and they sell it to the customers at a lower price. So all of the bullish comments that will likely appear on a video like this saying Amazon is a customer, Walmart is a customer, all these different governments are a customer. Well, yeah, of course, those guys aren't idiots. They see that this company is basically giving away the product at a loss. That is a big, gigantic red flag. In fact, I would just hit the X button if I was not recording a video right now and not look at this company again until this trend changes. Now, analysts have started to pile up in this company, and we'll talk about here why in a second. There are some positive catalysts in this company, but primarily from an investment bank perspective, a company like this is raising billions and billions of dollars in order to sell their product at a loss to customers like Amazon and Walmart. But many analysts are lining up and saying that trend will eventually change, or at least that's what the company has some people believing. Now, we have other operating expenses. Believe it or not, our gross margins is not the end of the story. Notice our research and development basically tripled. Our selling general administrative expenses went from 29 million to 73 million. So a lot of you will correctly assert that, well, look at our revenue growth, not only this year, but look what they're guiding in terms of revenue growth. Well, yeah, of course, look what they're doing to their sales and marketing budget. That more than doubled over the last year. We've got impairment on long-lived assets, not really necessarily something I'd be really concerned about. These other two costs, while we have to recognize them from a financial perspective, wouldn't really focus on them too much. We have our total operating expenses coming in at $112 million. So you take your 162 in revenue, minus off 249, you get negative 87 million. Now you got to minus another $112 million off of that. You get to a negative $200 million on that operating loss side. That has accelerated, quite frankly, over the last 12 months. You notice for the last 12 months, the company lost $437 million. So this negative 200 million actually has accelerated, because if you annualize this number out, you get to a number closer to $800 million. So it was a quarter where we really saw the cost of the products, but also the operating expenses really accelerate over at Plug Power. Now they kind of go in reverse, and so some of you might say, well, what does it look like from a cash flow perspective? Well, it looks even worse. We pull down this 459 number. That was our net income for the last 12 months. You come all the way down here to net income, you get a negative 400, and we'll call that $60 million. So you pull that number down into your cash flows. If you're looking at it from a yearly perspective, you get to add back in things like stock-based compensation. Take a look at this. Who's getting rich over at Plug Power? It's the executives. $76 million worth of stock-based compensation. Last year they were sitting at just 17, so they must have bought a new yacht and a new Rolex this year, because boy, that stock-based compensation really went up over at Plug Power. You get them all the way down after all your add backs and subtractions. Net cash used in operating activities actually paints a worse picture than last year. You lost $358 million worth of cash flow. Last year, it was $155. Heavy investment over at Plug Power, over $172 million. Purchase of property, plant, and equipment last year just at $22 million. If you're bullish on the growth of this company, that's obviously something that you'll be bullish on, the fact that they're investing in that. Now, in terms of how this company is financing things, because they're losing money from a gross perspective, operating perspective, net income perspective, a positive, and in this case, a negative cash flow basis, this company is just burning money like a hot fire on a winter's evening, and they are financing it by actually selling the stock. We see here proceeds from public offerings. This is essentially dilution. Over $3.5 billion worth of stock sold this year. Last year was just $1.2 billion. So they're accelerating those share purchases, and people wonder why investment banks and analysts line up behind a company like Plug Power. If you look at Wall Street, they are at a firm buy on this company, okay? You'll look at all the analysts, you look at all the coverage on Plug Power. What is it? It's buy this stock, even though everything from a fundamental perspective looks like one of the worst stocks that we look at here on the channel. We look at probably close to 100 stocks, individual stocks here on the channel. Well, take a look at this. This is why analysts are bullish this stock, is because they are raising $3.5 billion, and investment banks take 5 to 7 to maybe even as high as 10% right off of the top of this. So it's a bread and butter for those companies. And of course, they have their analysts out there pumping this stock because they know this stock, they're giving their product away essentially for free. They have negative margins across the board. What is a company like this going to do? They're going to consistently fundraise over and over and over again, and that is going to get investment banks rich. So of course, investment banks want retail to keep in this stock while they line their pockets with money. Now, in terms of the balance sheet, looks pretty good, honestly, as you'd expect. Okay, even despite the negative margins, when you raise $3.5 billion on the common stock, well, things are going to look pretty good. You got $2.5 billion worth of cash, got a little bit of debt on here, but it's fairly light because they've been able to keep this stock pumped up and they've been able to use the stock essentially as currency. Now, speaking of the stock from a technical perspective, looks kind of interesting. Honestly, we're on a weekly view here. Weekly, we are making a series of higher lows, at least in the longer term, especially over the last 2 years. Even if this stock were to continue to trend down, we're looking for a break below this trend line would actually signal, and it would have to be a pretty significant break because we've kind of wicked through it here over the last 2 or 3 years on this stock. A significant break of that would, in my opinion, look out below. On this one, you have areas down here at about $6, maybe even south of maybe $5 per share on this one if this longer term uptrend breaks. Now, on the upside, you do have some resistance on this stock over the $43, $44 per share range. The stock, quite frankly, has only spent a couple of weeks above that range before really taking a quick U-turn. Anytime this stock gets close to that $43, $44 per share range, well, it does a quick U-turn and it comes down. And you see in the shorter term, and I say shorter term, this is on a weekly view. So really over the last year or so, we are making a lower sets of highs on this one. So we had highs back up here at $69 per share, and we're doing this. We're kind of wedging out on this one where the upper trend line is kind of converging with this kind of downward trend line. That's why we say this one is at a critical area. If I were to guess which way this one would go, I would actually say the pressure is to the downside on this one, just based on the fundamentals that we looked at. Also the dilutions in terms of the share count on this one. Notice over the last year, just the share count, how high this one has just continued to go. I don't think that's going to necessarily reverse itself. You also have overhead resistance here at $40 per share, the downward trend line. Just my bias might be coming through this one, but it looks like to me, if I were to pick one way or another which way this trend is going to go, well, I would predict down. Now, could you invest in a company like Plug Power? Maybe in your speculative stock portfolio. If you got a couple $100 laying around, maybe you take a flyer on a stock like this, but build an entire portfolio around companies that have negative gross margins, even negative operating margins, and even negative net income. And I tell you what, I don't think you're going to be that great of an investor, because if you look at the history of investors, the most successful ones avoid companies like Plug Power. They don't invest in them. Hopefully you guys enjoyed today's video. Be back again soon with more. Good luck with your investments.